Good afternoon, esteemed traders and investors. Today is Monday, May 11th. I present to your attention another market review for InstaForex. As always, I'm glad to be here with you today. So, it's the start of the trading week, Monday, and we have important news. I've already filtered the news. Today, at 5 p.m., there will be existing home sales data in the US, and on Tuesday, US inflation figures. On Wednesday, there will be minor data releases, and on Thursday, the number of initial jobless claims and the core sales index. Overall, it's an average trading week in terms of news. Let's take a look at what we can trade on the charts. Let's go. Not quite, let's start with the quotes. For the price of gold, Monday opened with significant price gaps. By the way, I was carefully watching the market on Friday. I really wanted to sell in this area, right behind this range, but unfortunately, there was no pullback. There was no deep retracement, and at the market open, the instrument rewrote everything. Oil is not trading any lower. Overall, let's start by looking at the weekly time frame. Last trading week closed with a clear bullish pin bar, which fits perfectly into this overall picture of growth. But we also have a potential bearish scenario. So you could say that the instrument is currently in a triangle. Of course, no one knows which way it will break out. But overall, there are general recommendations for traders. For those who want to buy the instrument, the buying zone on the 4-hour time frame is situated at a lower point, at approximately the level of 4,550 per troy ounce. The bearish breakdown was already tested on Friday. Here it was tested once again. Here we should mark this zone in a strikingly vivid and bright red color, something like that. So there are two distinct price zones between which you can trade. Now, let's move on to the Euro-CHY US dollar currency pair. Last week, on Friday, I suggested a potential short-selling trading idea for this instrument, entering from the range and testing the bearish breakdown with a stop loss. On May 6th, the instrument basically moved right at the market open with a significant drop of almost 400 full points in value. The instrument is currently undergoing a correction phase. Interestingly, a range remains between the Asian and European sessions following the bearish breakdown on the M15. By the way, it actually might even extend all the way very nearly to the gap closure. This also needs to be taken into account. But these two moves could very well please the sellers, at the very least up to the bullish reversal on the 15-minute time frame. On H4, on the 4-hour chart, the instrument is clearly ranging in the current price zone, but there is a significant amount of hidden money below, which I think sooner or later we will access. We can see a clear move towards. Therefore, in this situation, I would naturally look at selling opportunities, but I wouldn't forget that bullish bounces also need to be carefully picked up, and accordingly the zones are in front of you. The short zone on the 15-minute chart. We're right at it now. We're holding slightly above the second one, and below is the bullish reversal zone. The euro-dollar downtrend this movement is also fully expected by the market, and the main level to watch is 1.13900 or perhaps 1.13926, which is quite achievable. That is to say, if the instrument drops down from the current price levels with a stop loss of literally just 150 points, the potential is huge. You could realistically make a profit of almost 4,000, so selling at this stage appears to be a very profitable strategy for any trader to consider right now. Within this specific zone, when tested, even if you manage to get a perfect score of 100 points, the nearest target is at least 1.1, and the second target is located even further inside the area. This is already a 10-to-1 ratio, and then the instrument can keep falling and falling. There's a lot of debt below, a lot of gaps. Someone left these levels, in my opinion, on purpose. All these fake moves we see at the session open, in my view, are just the beginning of a major drop. The pound also crashed at the market open. It also tested the short breakdown zone. By the way, it also tested the longs. Unlike the euro, it bounced off them quite well. Let me remind you, there's also a lot of debt on this instrument. This is especially evident at the 1.34468 level. If it moves from the current levels, then at the absolute bare minimum, you can take this 1.5. The instrument is currently correcting from above, and there are two distinct zones that have been clearly broken, marked specifically by a gap. If they offer favorable and attractive price points, you can also consider selling in anticipation of a potential downward decline in this instrument's quotes. overall on the weekly charts, there are no signal bars either for the euro or the pound, of course. Right now, we can only rely on this gap and use it as a reference point, in the hope that the third wave will come from this gap and a new major short trend will emerge.
Looking for real trading advantages? InstaForex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
As for the US dollar Canadian dollar, this instrument also shows on the H4 and even on the weekly charts, let's probably start with those, it displays a strong, impressive engulfing pattern on the weekly time frame. And a clear consolidation area at the 1.37 level indicates that the price will be here. And if the price stays here, this points to a strengthening of the US dollar, the idea we just discussed with the previous two majors. Accordingly, for growth, in other words, this is a signal bar, you can expect this instrument to rise, you can count on it. I mentioned that there were zones for buying last week, and those who bought from the long zones, having gained 300, now already have 900, but that's not the entire move. The main level hasn't been broken yet. I believe there's still room to pull out, well, up to 1,500 points, and accordingly, in this situation, we should take a closer look at longs. There could be good short-term corrections. Accordingly, these should be used to build up long positions for a breakout above 1.37 dollar-yen. No matter how hard the Bank of Japan tried, people are still buying up this instrument. And by the way, on Friday we tested the long breakdown zone and the growth continues. If you happen to get into a long position on this instrument, though most likely you didn't, it's better to unload at the 157 level. By the way, this guy is giving us a pretty good pin bar this week. And by the way, it fits into the overall long trend. And if the Bank of Japan doesn't have sufficient financial strength and resources, the financial instrument will continue to rise. And something tells me that's very likely indeed how it will turn out. As for oil, oil opened with a gap up. And let's start with the weekly time frame. Last trading week was a correction. The instrument is clearly moving sideways. I think we'll see 100 more than once because we're already at 99. But I don't see any signal bars yet. Of course, you could try to force the pattern, say this is wave A, this is B, and now we're in the third wave, which would play out this kind of scenario. That's quite possible. You can see something similar on the 4-hour charts as well. In any case, I believe that trading oil to the upside in the current geopolitical environment is the right approach. Accordingly, if we get a corrective move, at least to break the long from the gap, then you can. Consider going long using this simple scheme.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
Bitcoin on the weekly chart is not currently providing us with a clear signal to buy or sell. The fours clearly show that the instrument is tired of growing, but from the point of view of stop hunting, there are no interesting situations here. The American stock is closing at historical highs and is very overheated and overextended, but this is not a reason to sell. And I explained 2 reviews ago why.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
Dollar franc. The dollar franc stands heroically. In this specific zone, well, let's just say it doesn't necessarily signal a winter-long breakdown. So far, looking at the charts, last week was a bearish pin bar, showing a bearish trend. The week before last, and last week as well, were also quite disappointing. Here, on the 4-hour time frame, we have broken below the previous lows of these recent weeks. And basically, the instrument is holding. If you're dreaming of longs, and that's possible, take a closer look. Here. You could either enter from the current levels, hedging your ideas on other instruments, betting on the growth of the dollar franc, and hide behind this impulse. That is, you can count on about 1,000 points, aiming for around 2,600 and then up to 3,000. Or you can watch for fresh long breakouts, which by the way may not happen, and monitor for a break in this short trend. For example, if a specific type of significant long impulse comes through and completely disrupts this structure, then a brief corrective movement with a pullback to this long breakout. Here, you can already start buying something, but your risk will no longer be 1 times 500. There, it's about 3 times less, so it affects our crosses. This is within the framework of the grid trading method. We are waiting for a new low on the Canadian franc to start building a grid of limit buy orders. Australian dollar, Canadian dollar isn't giving a signal yet either. It's also accelerating and not providing good corrective moves. As for the New Zealander, we're interested in the year's lower lows. The Australian and the New Zealander are also just sitting at their highs. Euro, Australian dollar seems to have given up on the long breakout, but it could still play it out.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
Euro, Australian dollar and Canadian dollar gave a very strong and clear bullish impulse. By the way, for those who want to trade it using the impulse method, you should pay close attention to this bullish breakout, which it might come back to retest. The same goes for silver as well. Last week, it also produced a bullish engulfing, just like gold did on the weekly time frame. Ahead, there's a level at 82.9. I think there's a high probability of a breakout here, so it makes sense to look for long opportunities. Basically, the market is currently consolidating very strongly, but if we can get some good prices for buying, then we should consider opening a long position. At the very least, we should wait to see if it drops down into this specific support zone. Let's mark this area in green to keep track of it. And then right here, of course, you could consider at least a 1-to-1 kind of trade. I've already drawn this setup before, and I'll slightly adjust my lines because of the way the quotes have moved according to this pattern. That's all for today. I liked everything. Friends, InstaForex offers a free consultation with a personal trading consultant. Follow the link in the video description, fill out the callback form, and gain access to exclusive offers and special trading conditions, BRT Plus for risk-free trading. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.